A commenter just asked me what I think about the fact that five countries are potentially now working on creating their own currency. Those countries are Brazil, Russia, India, China, and South Africa. There's a piece here that we can take a peek at in Coin Telegraph. Mainstream media, surprisingly, is not covering this, at least not yet. So let's take a peek at what we've got here. We've got this story that we want to cover, and let's see where, there we go. There we can show it. All right, so let's see what we've got. We've got a new world order could be emerging as an economic power, or as economic powerhouses increase their efforts to distance themselves from the US hegemony. Ooh, remember, hegemony is a regional power. According to reports, a top Russian official has claimed that the BRICS alliance is working on creating its own currency. Okay, let me stop right there. This is my first time reading through this, but let me stop right there. First of all, the BRICS, you're talking about relatively small economies, with the exception of China here, and but India has a substantial potential of being a relatively large player in the future. But let's add these together so we can do this at the same time. But in the meantime, my initial reaction to this is probably uh, Russian propaganda. I hate to say it, but it's probably Russian propaganda. And if this is coming just from Russia, it's not going to be, in my opinion, that credible. It's entirely possible that in the past, maybe in 2019, 2021, maybe there was this idea that, oh, hey, we should all get together and create a currency. Okay, maybe, but I don't think this is coming up now. I think the financial stability risks are too high right now, and there's too much tenuousness right now to actually care about creating some kind of new currency now. So I wouldn't be surprised if this is sort of a revived idea of when these countries maybe had officials together and like, hey, we should make our own currency. Yeah, 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 yeah. That's a good idea. I think people immediately get very nervous about this idea of, oh my gosh, what's that going to mean for the United States? The reality is nothing. Like, this has been done many times before. I mean, consider when the euro was created. Did that really change anything? No. If anything, some people say the euro helped create the European crisis and actually reduced growth in Europe because they had a combined currency and you no longer had central banks in individual countries which could respond. I mean, consider what happened with Europe. The euro really went into prominence, somewhere around 2003. And you had a massive austerity crisis around 2010, 11, 12, 13, 14. I mean, there wasn't even enough money to pay for trash service in Greece. Why was that? Well, it was because Germany was progressing so well and their economy was holding up so strongly that the entire Eurozone was actually lifted up by Germany. And so the Eurozone thought, okay, well, let's put a lid on Germany. Let's lower the strength of the strong countries, Germany, France, right? And now, if we put a lid on them and they have austerity, well, crap, we are also essentially implementing austerity to all of the other countries. But then when you look at what is derogatorily called the pigs, Portugal, Italy, Greece, Spain, these are the highly indebted countries, or at least were. When you look at these countries, you look and go, wait, why are they supposed to go through austerity? They need stimulus, not austerity. And so what ended up happening was not only massive protests, but really a fear that the euro was going to collapse. So, if anything, people believe that this experiment of the euro and sort of a common currency was actually a greater mistake because it didn't give you that freedom to basically print and trade and swap, like liquidity swap, so to speak, as freely as banks would like, to create more of a market equilibrium. The more you try to engineer currency, oftentimes the less functional it ends up becoming, and that was really seen in Europe substantially. And then growth fell so much in Europe, whether that's causation or correlation is to be argued and debated. But growth fell so much in Europe that you ended up with negative interest rates at the end of the decade. So right before the pandemic, right? But I mean, look at the countries that you're talking about here that are listed together. First of all, Russia's like a joke in terms of economic size. They act like they're equal to the United States. but their economy is somewhere around the size of Brazil's. And it's probably substantially weaker today, given that I'm going to give you Russia's economic strength as of 2021 was about 1.77 trillion dollars. Honestly, that's probably down somewhere around 20%. They're probably around a 1.5 trillion dollar economy. That's a fraction compared to the US GDP. And look, even though we talk about recession might be a reduction of what, maybe half of a percent or something. So we're still sitting in excess of $23 trillion of an economy. That makes our economy 15 times as large as Russia's, 15 times as large as Brazil's, which is part of this. You know how many times larger we are compared to South Africa? 55 times. Yes, China might hold a candle to us, but China has its own problems. Fortunately, China isn't seeing inflation because they're not actually seeing this massive worker shortage. In fact, there are a lot of people with not enough money in China. So you're definitely still developing in many regards in China. India is still somewhere around 1/8 the size, 1/7 to 1/8 the size of we are. And yes, they're growing. And yes, they have the potential of growing stronger. But when you consider Europe and the size of these economies, am I really terribly concerned that, oh, they might form some new currency? Who gives a crap? It really isn't going to make a difference. So I think a lot of this is probably just unnecessary fear mongering that occurs. And quite frankly, I made a video the other day because a lot of people now are talking about this idea of, oh my gosh, the dollar is going to lose its reserve status of a currency because it's going to no longer be used as the petrodollar. Please just type into YouTube, Meet Kevin, United States dollar, China. Type that in and watch my video, The Collapse of the Dollar, the End of America, and the Rise of China. And when you go through the video, I think you'll realize this whole petrodollar and dollar crisis disaster is A, historically something that's always been going on, and B, not that big of a deal. Not that big of a deal at all. It's unlikely anytime in the near future, especially before oil, in my opinion, becomes a lot less functional in our economy. But also, this is quite silly. Look, Mexico joining as well. Who cares? Like it doesn't matter. It really. And then you have to also ask yourself. So first of all, we went through Europe, then we went through petrodollar. Now you have to ask yourself, who cares if they make their own joint currency? If anything, it's going to just cause the euro problems. But even if somehow they had their own currency, big deal. Okay, fantastic. Like, congratulations, you have your own currency. Does that all of a sudden make your economy a lot stronger? No. Is there an idea that, well, maybe people will want to buy this new currency's debt and maybe there'll be a central bank to moderate all of these countries? Now you have to ask yourself, do you really think China wants to lose control over the Bank of China and basically relinquish monetary control to a shared voice with South Africa, Brazil, Russia, India, and maybe Mexico? Of course not. It doesn't make any sense. Like, from a logical point of view, it makes little sense. And then from a practical point of view, it makes little sense as well because of the euro crisis. But then, I mean, even the African states were considering creating a currency called the Afro. Look it up. That's not a joke. After the euro's creation, there was a thought that African countries would get together and create the Afro. It ended up falling apart, and it was never launched. But it really ultimately, like, okay, go have your common currency. Does it really make that big of a difference? No. The entire currency is still going to be underwritten by the strength of the underlying economies. And even if in aggregate somehow that common currency has a larger underlying economy than the United States, is the trust of that the same as the US dollar? No, and it won't be for a very long period of time because you still have to underrate right the risk of Russia going bankrupt and maybe 10% of your bonds becoming worthless with this combined brick currency, right? So you still have to underwrite. It's like there's this famous, I don't know what that saying, if there's a saying to it, but there's this famous idea on Wall Street that when you take two mediocre companies, or even two, you could even go as far as saying take two good companies and merge them, you end up with one mediocre company. Usually, mergers are not a good thing. You lose the innovativeness that originally came, and I think a lot of that would be true here as well. So to me, it's just once again just a bunch of nonsense and hogwash. But we'll look at it anyway. According to reports, a top Russian official, again, the fact that Russia is claiming this is just a complete nonsense. But anyway, And I'm not saying this is not potentially something that could happen at some point in the future, but I mean, again, I think I've made my argument. Made the comments at the St. Petersburg Economic Forum event in India, whatever, reportedly stressed the importance of both nations working together towards a new medium of payments. Well, do keep in mind, this a new medium of payments is different, or potentially different. I mean, I suppose you could have some kind of currency system, but what you are seeing is this move away from SWIFT to some extent. China has its own banking messaging system and platform called CIPS, SIPS, and that's been going on for years. I mean, the larger these economies go, of course, there's going to be competition to banking systems, but that's okay. That to some extent is also healthy. It keeps the United States innovating as well, right? You know, when you're in the lead in a race and somebody's catching up to you, you start running faster. He also said the currency could benefit from China and other BRIC members, not just the West. Right? I doubt that. The composition should not be based on inducting new monetary ties and establishing a strategy that does not defend the US, but rather forms a new currency, blah, 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 shared objectives. Yeah, y'all just want to grow. That's fine. Russia would probably love this because then they'd have some currency stability. That's the other thing you have to keep in mind is if the source of this is Russia, there's probably a reason the mainstream media isn't covering it because it's probably just Russian propaganda. Because Russia would love a stable ruble. The ruble's down like 20%. It's not good for their economy. So they would love to, tie their anchor to other countries. I mean, Russia is essentially devastating their economy. Really, I mean, you have to consider that the individual who was arrested who worked for the Wall Street Journal. Let's see, Russia economy. That was this is the last piece the Wall Street Journal reporter made before he was arrested in Russia, in Moscow, I believe it was the following, and I think it's also worth looking at because it just gives you a little bit more of insight into how much should we really actually care about this Russian propaganda, really. And there we go. Let's throw up the coupon code while we're at it. That will, by the way, the price for that will be going up on April 12th. So that's in about 10 days. That's when CPI occurs. Anyway, so what do we have here? Let's see. There, I can expand it a little bit. Good. The opening months of Russia's invasion into Ukraine last year drove an increase in oil and natural gas prices that brought a windfall for Moscow. Those days are over. As the war continues into its second year and Western sanctions bite harder, Russia's government revenue is being squeezed and its economy has shifted to a lower growth trajectory, likely for the long term. See, of course, Russia's lashing out, and the idea is let's all create a currency together with countries that aren't falling apart like Russia. The country's biggest exports, gas and oil, have lost major customers. Government finances are strained. The ruble was down over 20% since November against the dollar. The labor force has shrunk as young people are sent to the front, the war front, that is, or flee the country over fears of being drafted. A lot of Russians, by the way, fleeing to Finland, which Finland is a potential NATO member. There's a train, or I'm not sure if it's operational anymore. I believe that goes from St. Petersburg directly to Finland, like a nonstop kind of train. Uncertainty has curbed business investment. Yeah, no kidding. Could you imagine being a business in Russia right now? You just want to survive. Could you imagine trying to expand right now? Russia's economy is entering into a long term regression. That's even worse than recession. There's no sign the economic difficulties are bad enough to propose a short term threat to Russia's ability to wage war. In other words, don't think the war is going to end because of this. But state revenue shortfalls suggest an intensifying dilemma over how to reconcile ballooning military expenditures with the subsidies and social spending that have helped Vladimir Putin shield civilians from hardship. In other words, at some point, you're going to inflate away the value of your currency. Russian billionaire blah 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 warned this month that Russia is running out of cash. There will be no money next year. We need foreign investors. Look at this. So you have a Russian billionaire and raw materials guy, commodities kind of guy, which the commodities just are not surging the way people thought they would. People thought as soon as China reopened, commodities would surge. It's just not happening right now. But now, what do we have this out of this here? Well, we have this indication that look, you basically have a Wall Street Journal reporter who quoted a Russian billionaire saying Russia is running out of money and we need money, we need help. And immediately after this, gets arrested. Evan over here. This was his last piece before he got arrested. I mean, basically the day after the story published, he was in handcuffs and in prison. The fact that he made Moscow a second home was mind blowing to me. But then again, that's probably how he actually got the content for his stories. So I suppose it cuts both ways. But anyway, having largely lost its European market next door and with other investors pulling out, Moscow is becoming ever more resilient on China. See, look at this. They want that. I'm telling you, what's the phrase? I think there's a relationship phrase, hitch the wagon. Moscow is trying to hitch their wagon on China because they're falling apart, threatening to realize long simmering fears in Moscow of becoming an economic colony of its dominant southern neighbor. Despite Russia's resilience in the short term, the long term picture is bleak. Moscow will be much more inward looking and overly dependent on China. Said a senior fellow think tank in London. Big part of the diminishing outlook stems from a bad bet by Putin last year that he could use Russian energy supplies to limit Western Europe's support for Ukraine. Oops. European governments, instead of tempering their support for Kyiv, moved rapidly to find new sources of natural gas and oil. What we really ought to do is build more nuclear power plants. That's a phenomenal energy source, but people are weenie babies about that because, no, I don't want a power plant in my backyard. I mean, I get that. I wouldn't live next to a nuclear power plant either. So, I mean, I can't blame that. But you got to build them somewhere. Most Russian gas flows to Europe have stopped after initial jump. Global gas prices have fallen sharply. Moscow now says it will cut oil production. You know what's funny, and it shows you how worthless Moscow's attempts to control the oil market are. It seems like anytime oil says or Moscow says they're going to cut oil production, oil prices do nothing. In other words, I think Moscow thinks that the oil prices, are going to surge after they say, "Well, we'll cut production," and everybody's just like, "Whatever." That's Russia being Russia. I really think that's almost how this brick currency piece is being understood. It's just, quite frankly, it's Russia being Russia. It's not that big of a deal. Now, what is a big deal, though, as we continue with this story here, is the fact that you can get life insurance in as little as 5 minutes by going to metkevin.com/life. And take a look at this StreamYard, which is the platform that I use to bring you my daily content every single day. For over the last 2 years, I've been using StreamYard to help me produce content and live stream to you. They are now a sponsor of the channel, so you can go to metkevin.com/StreamYard, learn more about them. It costs you nothing to use my link. Of course, paid promotions here. It costs you nothing to use my link, but it would be a way of saying thank you to the content you get here. So take a look at StreamYard. Anyway, let's keep going. As a result, the government's energy revenue fell by nearly half in the first 2 months of this year compared to last year, with a budget deficit deepening. The fiscal gap hit of $34 billion in the first 2 months, the equivalent of more than 1.5% of the country's total economic output, is forcing Moscow to dip into its sovereign wealth fund. Basically, they're liquidating money just to stay alive, right? Now, we're not going to read this all word for word, but I think the obvious impact here is we are we're looking at Russia that's essentially lashing out over the fact that their oil revenues are drying up. Here you can see on the left side, oil and gas revenues drying up. Their federal budget is negative. Retail trade is also under its 100 base index, so you're down about 6-7% over here. Fall in exports, tight labor market has increased government spending and worsening inflation risks. Russia's inflation was around 11%. In February compared with February of last year. So look, I mean, you've got issues. You've got where that Russian billionaire who was interviewed was dreaming of competing with Elon Musk's SpaceX. Yeah, oops. Well, and this goes sort of into a little bit more background on the billionaire here. So, but I think the point is this idea about this BRICS currency or whatever, man, bring it on. But really, I mean, learn the lesson, study the euro. If you want to be, and look, I'm really simplifying this. I spent years studying the collapse of the euro because that was a lot of what I had to write papers on in college. And I studied economics, accounting, political science at UCLA, corporate finance, all these things. And the euro was such a big subject at the time because while I was going to school, the crisis was occurring, and we even visited Europe and studied it there. Of course, I was also born in Germany, so visiting Europe is really fun. But yeah, I think this is just nonsense. I mean, I appreciate it coming up, and I think it's good to talk about. But really, if somebody's going to be, but Kevin, the BRICS are going to replace the U.S. dollar. Stop worrying about it. If anything, I think it's just good ammunition for But quite frankly, it doesn't surprise me that a lot of crypto papers are talking about it because the more fear there is that the dollar is going to lose its strength and that other countries are going to create their own currency, the first thing that happens is people start going, "Well, this means crypto gonna go up." Well, yeah, to some extent, that is kind of what happens. Now, one of the neat things about Bitcoin is that it's actually been resting on 28,000, 200-ish, which is a pretty important threshold here. So we'll see if BTC can hold. But after we realize how much manipulation there potentially is from Binance, it makes me a little nervous. But that's not to say I'm not a big fan of it longer term. What blockchain could bring us. I think I've said for years, big fan of blockchain technology. Not so much of a fan of the order books yet and the order flows. I think they're still too easy to manipulate. So anyway, that is my thought on this BRICS question. Again, I appreciate you bringing it up. I think it's wonderful. I think you even donated money here to bring that question up. It was fantastic. So hopefully this was useful to you. What is this? 247 years ago, the founders of the U.S. rebelled against the theft of money taxation by the Central Bank of England. 137 years later, the same owners of of that stole back. Look, I think we've made our case here, we don't need to go through some of the arguments again here. But this is an interesting one though. Here, this comment here from Ronald: trust in central bank hasn't worked out for the average person. It's destined to fail. Well, see, I would question where you are evaluating what people's trust is in central banks. And quite frankly, if you look at inflation expectations from the consumer, it certainly appears as though the consumer is not as terribly worried about the dollar as anybody in the finance community seems to be. It also seems like the average consumer doesn't actually feel like they're in a recession, given that they're mostly spending through this recession. It seems like most people are just going on about their lives as usual, mostly because they probably built up enough financial strength during COVID that they can. So good for them. But anyway, that is the end of our bricks segment and fun.